In this video, we're gonna dive into the top 6 stocks with huge potential upside based on analyst consensus. Out of the thousands of stocks in the market, I've narrowed down to just 6 stocks that should be on your watch list using 3 main criteria: a buy or strong buy analyst rating, a market cap of at least 100 million, and a potential upside of over 50%. Watch until the end of the video because I'm gonna do a quick analysis for each company. So for each company, I'll go through the company profile, their analyst coverage, and what I like about the company. So the first stock on our list is Eventbrite, an online ticketing platform that connects event organizers and the attendees. So it captures my interest because I've used it for my own small scale events before, and true enough, they mentioned that they are the leading ticketing platform for small to mid market events. And Eventbrite is currently trading at $5 at the time of this video, and 7 analysts are giving an average 1 year target price of $8.74, which points to a 75% potential upside. The one thing I like about Eventbrite is that they are a software platform business that's pretty scalable, right? Given how they operate in 180 countries worldwide already. And more significantly, they empower 60% of the paid tickets in US in the first quarter 2024. This reminds me of Airbnb, right? When they just first started and they don't need to own any hotels. Similar to how Eventbrite, they don't actually need to own any of the events or organize any of the events. They basically provide a platform and the organizers use the particular platform. Speaking of the platform, it also unites everything under one roof. So anyone can get started quite easily. You can be an online influencer, right? Maybe like me. All right, so selling stuff on Shopify and organizing online or physical events for your audience. And you can connect them, right? Or you can get their email address to a mailing list like MailChimp. So it's pretty fluid. If you use Eventbrite, you can have everything connected to Eventbrite itself. And the last thing I like about Eventbrite is that it's founder led by the husband and wife duo for over 18 years. So since the beginning, it's already been 18 years, and they own a meaningful ownership of more than $15 million. And last but not least, right, Eventbrite has actually survived through the pandemic where nobody is organizing any event, and I believe that the good times are ahead of them. Okay, the second stock on our list is Bill.com. Okay, a cloud-based software that simplifies, digitizes, and automates back office financial processes. Quite a mouthful, right? For small medium businesses. Alright, so basically it handles the AI and AP backend lah for things like how to generate and process invoices, send and receive payments, sync with their accounting system, and manage the cash flows. But okay, although it's very simple to understand, right? Basically, it's accounting. This is quite a big deal because recent research shows that 90% of the surveyed US businesses still rely heavily on paper checks or other manual processes. So right now, Bill.com is trading at 52 US dollars, and it's well covered, right, by 27 analysts. They are giving an average target price of $83, which points to a potential upside of 59%. One obvious thing to like about this company it is that it's disruptive, okay, or rather is pretty useful of being a digital enabler. So they help those small medium businesses transform their manual processes from a very cumbersome one to a seamless workflow. Okay, and these numbers, okay, like the 111% net dollar retention rate and 87% gross margins, are pretty indicative of their success. On top of that, okay, Bill.com addresses a large and growing market. So this cloud-based automation market, right? Okay, for the back-end processes is expected to see significant growth in the coming years, and the company is well positioned to capture a bigger share in both the US as well as the global market. So the most impressive thing that I see about the company is how it can generate strong and consistent revenue growth. Okay, so we can see over here that there's 69% CAGR from 2020 onwards, and it hasn't stopped. After the pandemic, so it has continued to increase, although at a slower pace, but it has continued to increase. So this is an incredible feat, to boast about when you see other SaaS companies, their revenues are coming down, and they are having job cuts, etc. So Bill.com is still growing consistently. The third stock that I have is none other than Snowflake, okay, where it acts like a giant storage facility for the company's data. Okay, so for a particular user who joins Snowflake, you can have all your data in the cloud for using Snowflake, and the data sources from the user can come from various formats. But using Snowflake, right, it allows the user to analyze this data very quickly and efficiently using powerful tools. And I believe that there are two main features of Snowflake that separates them from the other competitors. So one is that it separates the data storage from the processing power used to analyze it. So it makes it a very scalable and cost-effective solution in the long run. And second, so many companies are already migrating their data from on-premises, those very old whereby you have your data in those kind of in the office itself, right, environments, to the cloud post-COVID. And Snowflake is already one of the best platforms out there to benefit from this uh, cloud native shift. Okay, and this is a pretty long journey. Okay, transition to the data cloud, and Snowflake is already out there, ready to benefit from this growth trend. And that said, right, Snowflake share price has been hammered recently due to the CEO's retirement. Okay, so basically they announced the retirement, and there's a weak guidance reported this year itself in 2024. Okay, so with that, right, Snowflake has dropped quite a lot in the past year and is now trading at around 136 US dollars. So it's very well covered. 47 analysts covering the stock and giving an average target price of $205, pointing to a 50% potential upside. Again, so there are a couple of things to like about Snowflake. Okay, the company is experiencing double-digit revenue expansion at a time where a lot of companies, their revenue is coming down, and as well as impressive customer growth and retention rates, demonstrating a very strong positive momentum going forward. And as previously mentioned, their cloud native architecture, right, is considered very innovative and scalable. So it gives them this technology edge over their competitors. What's more, Snowflake boasts thousands of customers, many of them which are Fortune 500 companies. So some of them included here are KFC, MasterCard, PepsiCo, Adobe, and more. But just one big caveat here. So when I read out more on Snowflake using Seeking Alpha, I noticed that the valuation is on the high side. So although their price to free cash flow has dropped significantly in 2024, it is currently still sitting at 61 times. So the sector median for this IT sector is 18 times, which means Snowflake is potentially, right, 3.3 times more expensive compared to the sector. But speaking of which, if you are interested in reading up both the bull and the bear case of Snowflake or other stocks and save yourself a lot of time when it comes to stock analysis, Seeking Alpha is a great research platform you can consider. So the biggest benefit of Seeking Alpha Premium is that it has such a big community of experts, right? And authors. So they offer different viewpoints for a particular stock. For example, if you're interested in Tesla, you can read up both on the bullish articles and also the negative ones to cover any loopholes that you might miss out on. And definitely check out the comment section because that's where a lot of juice is also hidden. On top of that, you can even follow your favorite analysts and be notified every time they release a new article. Still not enough stock ideas? Then you can use Seeking Alpha's robust stock screener with various criteria like top rated, quant, dividend, growth, and rank them accordingly. So right now, you can sign up for the 7 days free trial. Okay, so no money down. 7 days free trial and get 20% off the premium membership at only $189 per year. So don't miss out on this great offer and join over 250,000 premium members today. Coming back, our fourth stock needs no introduction as the leading online course provider, Udemy. So as of September 2022, so 2 years ago, the company already boasts 74,000 instructors, 57 global learners, and operates in over 180 countries. So I would say it's pretty crazy, right? And you look at the marketplace courses, there are over 200k courses, one of the biggest I would expect from any company itself. But Udemy is not stopping only at the consumer side of things because it went upscale into Udemy Business, catering to corporations and even the public sector. So this is something that I see happening in Singapore for the Skills Future courses. Udemy is now trading at around $8.80 at the time of this video, and 11 analysts are giving an average target price of $14.7, so translating into a potential upside of 66%. Coming back, okay, to the things I like about Udemy, the first thing I like about Udemy is, of course, as what I mentioned earlier, the upselling to enterprise customers, as it ensures stickiness and more recurring income. But Udemy went a step further and expanded into a suite of products like consumer subscription, the pro add-on, and even cohort learning. So given that upscaling is really crucial, right, in this AI powered era, Udemy is poised to ride on these tailwinds. And contrary to what I believe, right, Udemy has shown that its total revenue has continued to grow even after the COVID pandemic, a bit at a slower pace, right, in the recent years. So what's more, the revenue is geographically spread out, with over 60% of the revenue coming from outside the United States. Udemy has also given us a slide of their multiple drivers of long-term sustainable growth, okay, such as Udemy Business, international expansion, and their ability, right, to increase prices going forward. Next up, okay, our fifth stock is none other than software company Artwork. So if you are not familiar with this company, it is actually the world's largest freelancer marketplace as measured by GSV, or gross services volume. When we see how the so-called iron rice bowls jobs are being displaced by AI and the sudden job layoffs, many people, especially the Generation Z, are turning to freelancing, and this bodes well for the freelancer platforms. Artwork last changed hands at around $10.57, and nine analysts are giving an average 1 year target price of $18.89, pointing to a whopping 78% potential upside. So switching gears to what I like about Artwork, it is the same thing I see in Udemy as well, the upscaling to enterprise customers. So from my point of view, Upwork can provide a big pool of cheap and diverse talents, okay, to huge MNCs like the Microsoft case study we are seeing here. Basically, the world is their oyster. And why wouldn't companies want to lower their costs and opt for cheaper labor, perhaps in Philippines or maybe in India, when it's readily available and they can just work online? So next up, we can see that there's a broad-based growth in all aspects for Artwork itself, whether being their AI category growing 50% year-on-year basis, raising their guidance outlook for the year, and even repurchasing 5.2 million shares in the first quarter itself, indicating that its shares, right, may be so-called undervalued. And coming from my own experience, when I look for freelancers online, there are only three main oligopoly players in the freelancing industry, right? In the space itself, namely Upwork, Fiverr, and Freelancer Limited. Hence, I do believe that they have this strong economic moat, right, of a network effect, because it's definitely tough to build up a base of both freelancers and customers from scratch itself. And it will just continue this flywheel effect, right? Similar to how Facebook has a WhatsApp, has Instagram, Apple has a iOS platform, and Airbnb also has this network effect. Okay, similar to how all these companies work. Okay, the last stock is none other than seatrium, which I'm pretty surprised on how bullish the analysts are. Okay, I've done many videos on it, so I will pretty much skip the company profile and go straight to the analyst coverage. So Citrum is trading at around $1.80 at the time of this video, and there are 9 analysts covering it with an average $2.80 target price, translating into a 57% potential upside. You can check out my previous video right over here, and if you are keen to find out how I reverse engineer the management targets of 1 billion EBITDA and 8% ROE by year 28, right, to get a rough target price of $3. Or you can also download the Excel calculator yourself by joining my free Patreon membership using the link down here below. And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video.